The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here, and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the October 3rd, fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. It's absolutely fantastic to be with you here this morning. I hope everyone had a terrific Thursday. Let's make sure that each of us do everything humanly possible to not only have a fantastic Friday, but a fantastic weekend. And, of course, one of the best ways that we can start off our day, start off our weekend, is to remember the great Chinese proverb that goes like this: those who play the game don't see as clearly as those who watch. In trading and investing, I take that to mean we got to look at both sides of the trade. And therefore, we can go hunting for both bulls and bears. And we're going to do that for the next hour. We're going to do that utilizing extraordinary tools like that A to B equals CD pattern. That's right. You can't catch lightning in a bottle, but you can catch it on a stock chart, and we're going to show you how to do that. We'll take a look at our Fibonacci expansions and retracements. The combination of those two make our Gertley and butterfly buy and sell patterns. We'll look at Japanese candlesticks because the markets are always communicating to us, and that's the way it communicates. Of course, we'll look at our TAS market profiles, our Rhodes momentum trading signals. We'll utilize our Chapman wave counts. We'll utilize every tool in our bag to help us understand where price is headed to. Remember, it's an interactive show. That means we'd love to hear from our listeners out there, our viewers. Just give us a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. That way, we can go on a safari. We can go looking for those bulls and bears. Hey, it is Fantastic Friday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures. They're up at 96 points, trade out at 16,820. Russell 2000 up 9, trade at 1,100. S&P futures up 11.5, trade at 1950. NASDAQ up 22 points, trade at 39.99.75. Goldilocks getting smacked down this morning by the king of Dolares out there. Gold back $12, trading at 12.02. Silver up 4 pennies, trading at $17. Speaking of that dollar, and I've got a 10-minute delay on it, mine shows up 900 ticks, up 90 cents. Trading out at 86.60. Headed to a new constellation. That means the euro getting whacked. Yeah, the euro so far this morning, it's broken right through that support of that morning star pattern that it had formed yesterday out there. Not a good scene when you, of course, the day's not over, but not a good scene when you break a bullish pattern out there, especially on that first day. That's why you always like to have that confirmation. We'll take a look at the currency pairs. We'll do everything that we can within this hour. But I suppose the first question is, okay, so what's the market doing now? Look, we're going to take a look at charts out here. What I want you to do is we're taking a look at the reaction. Now, the market was up before the jobs report came out. So I want you to go ahead and get rid of that jobs report data. I don't want that to impact your decision-making at all. Because weeks from now, years from now, when we go take a look at stock charts, if we're technical analysts and we take a look at the technical patterns that are out there, we're not going to know what the heck the news was. We're trading the charts. We're trading the patterns that are in front of us. So where do we want to start? Let's go start with the NASDAQ, all right? Let's still see what's going on inside the NASDAQ out here. And we'll do it, this one we'll do from daily to intraday. And intraday, I'll just go down to the 30-minute chart. And don't take the ES Mini, we'll do it just the opposite way. So let's take a look at the daily chart here for the NASDAQ. All right, if we take a look at what the NASDAQ has done, let me get my cursor out here. If we go from the swing point from August the 8th, remember that's when the world was falling apart. The U.S. had just started bombing somebody, whoever we were bombing out there, I think it was, or there was the reports that we were going to go ahead and take action. Market was pushing down. It couldn't have possibly gotten more bearish. All the news out there was horrible. But remember, we don't really know what was going on August 8th, right? Yes, we do. When we take a look at the stock chart on August 8th, you had the market pushed down. It had a nice little bullish engulfing candle off the lows we came, and the market just continued to motor on up until it made a high here. And this is the NASDAQ. This is the futures contract we're looking at on September the 19th. Now, what have we done since September 19th? Well, a couple of things. Number one, yesterday, the actual low that we saw inside of the NASDAQ was down at 39.2775. What was it doing? It was getting down just into that 0.618 retracement from that low that we were looking at on August the 8th all the way to the high on September 19th. That number was 39.38. Got a little bit lower than that. No big deal. Pushed off of that area. Today, depends on how the day plays out. I can't tell you how the day's going to play out. We're going to go take a look at chart patterns. We're going to go take a look at where things are at, and then we'll assess from there. What we do know is this, that in our wave count on the way down, we've made 4 waves to the downside. If we don't take out yesterday's low, then that says, okay, and you know, Stevie here has been calling for not just a bottom, but a major bottom out here. That doesn't mean that we're going to go straight up. I'm not calling for what we saw take place from August the 8th. That could happen. I'm not calling for that. I'm just saying there's a bottom that is being formed out here. Hey, it's going to be rocky. When hasn't it been rocky out here? But nonetheless, it is a bottom that is in the process of being formed. If yesterday's lows hold, it's going to be pretty easy to create a bullish reversal signal today. We had a small-bodied candle yesterday. What are some of the keys as far as where we're going to get to? Well, we'll just get there along the way. But right now on a daily chart, what I want you to understand about the lead dog out there, one of the lead dogs in the marketplace inside the NASDAQ, is we have what could be a reversal going on in it. All right, so you got the 0.618 retracement. You got a 4th wave down. We got a bullish engulfing candle that is forming out here today. We're still in the red zone. We take a look at the Rhodes momentum trading indicators out here, and we're a ways away from the TAS market profile, which is at 4,027.15 is what I've got it on this daily chart out here. So get above that, and that could be resistance. So bounce up to that level, another 27 points. The key will be, can it get back inside the zone out there? Can it score a touchdown out here? That's what's going on the daily chart. If we go take a look at the 300-minute chart, let's go take a look at our Saratoga Bob 5-hour energy chart out here. If we take a look at the NASDAQ, what did it do yesterday? Well, it went ahead and made its own 4th wave on the way down. So we've got that. Now we're trading up above the market profile low. We're actually trading into resistance, which is right at the 4th. We're trading right into it right now. It's probably 4,001.75. We're only in our 2nd wave on the way up. Then with at least 2 more to go, and we're still in the continuation pattern. This is a 5-hour energy chart out here. So if it can clear this 4,175 level, again, a 5-hour chart, my 5-hour time frame completes here at 2 p.m. today. So a lot of time left in that. But you get above that, now you're starting to break above resistance levels. That is bullish. So where could the bounce move to if it's only a bounce, if it's only a counter trend rally? I cannot rule that out. I can't rule out anything out here. All I can say is, hey, you know what I've been calling for over a week out here, and so we'll see if that actually comes to fruition. Let's go take a look at retracements. If we take a look at retracements, we come up all the way back here to, looks like this is right around that September 19th area, down to the low that was put in here yesterday. You can see we're also right around a 0.382 retracement. So the next level would be 4,046. That would be your 0.618 retracement. So if you clear the 4,000, what did I say? It's probably about the 4,001.75 level out there. Then what you are likely to see is a It's a retracement in that number that I just gave it. I don't even remember what I gave it, what it was, but you probably wrote that down on a pad of paper. Let's go take a look at the 2-hour chart out here. If we take a look at the 2-hour time frame, what do we know? We did an A to B equals CD to the downside. We did a 1 to 1.618. A to B equals CD to the downside. And that was starting out here. This was on the trading session back at about 2 a.m. That was on September the 19th. That was your A point. Your B point was down here at one of those trough G's out here at price relative strength divergent pattern, the whole 9 yards. That was on September 23rd. Made a bounce, made a 0.618, a little bit more than that, but a 0.618 retracement. That created a C point. Now what the market has done, what the NASDAQ has done on that 2-hour chart is made a 1 to 1.618. A to B equals CD to the downside. Little piercing candle, some follow through. The key level here for resistance is going to be 4,013.80. So its market profile, its TAS market profile says 4,013.80. You clear that, and it will likely head up to that 0.618 retracement level that I had given to you just a bit earlier out there. You're only in its second wave on the way up. You've got everything looks pretty bullish as we speak right now, so that's the 2-hour chart. Let's go down and let's take a look at a 30-minute chart out here for the NASDAQ. This way we get a full feel of what's going on up on top, up on the bottom. If we take a look at what was the NASDAQ doing as it was stretching down into the low that it formed, again, a 30-minute chart between 11:30 and 12 yesterday. As it got down to that low, what we can see out here is it was pushing lower with what? Less relative weakness out there. Never a good sign. It says the rubber band is about to snap, and that's exactly what took place. Since we've seen that snap on the way up here, we're up above. So yeah, that Rhodes momentum. I've turned the colors off on this 30-minute chart, just a little bit easier for you to read. Right now, on a 30-minute basis, you're up above 39.95.88. On the NASDAQ. That happens to be your market profile resistance level. It's really important as I take a look at this 30-minute chart for price to stay above that area. If it stays above that area, because that has a very bearish-looking pattern. And on top of that, you've gotten to that potentially fourth peak out there. I'd have to say you probably have, as we saw the futures shoot up into 9 o'clock, but because this candle session here completes at 9:30. But as we speak, at this moment, there's really nothing bearish about this. Could this be a pop and a drop? Hey, anything can happen out here. The daily chart or the 30-minute chart says, yeah, some type of pullback could take place out here. How will we know if that's going to occur? You'd see it close below 39.89.13, and then it's going to be about measuring that retracement out here. So that's what's going on inside of the NQ. How about we go take a look at the ES Mini, and let's try to do this in reverse, although I'm going to have to do it really quick if I've only got 30 seconds. Where are we inside the ES Mini? Hey, in the ES Mini, what have we done here as we've made this high going into 9 o'clock? You made a higher high with less relative strength. No reversal signal just yet. So it's just a warning shot across the bow out here. A continued move above that high, which is, 1953.75, I think. 1953.75. You're 1951.75 right now. That says the market wants to keep cruising higher. Don't forget, folks, I've been calling for a very early Santa Claus rally, so be careful out there. Because if you're too bearish, you might get coal. And I don't want to see that happen to you. Just make sure you got stops in place. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and Santa Claus is going to deliver today here at TFNN as we give away mucho dinero. Our leaderboard right now, congratulations. In first place, we got D. Coombs, profit of $47,987. In second place, it's C. Norwood, $41,000. So we got a horse race. You got P. Willard trading out profit of $30,000. J. Krymian, $20,000 the upside. G. Ziegler up $17,000. D. Wilson up $12,000. R. Fady up $11,900. D. Kozlov up $10,000. M. Avias up $9,000, and R. Coletta up $9,000 in profit out there. So that is a wonderful thing. Good luck to each of you. And the rest who are maybe not are going to put on some extraordinary trades that are maybe coming up out of the pack out here. So it'll be interesting to see who wins, what their trades were like out there. And great thanks to Tom O'Brien for putting together this TFNN virtual trading competition out there. So good luck to all. The stock chart to be paying attention to perhaps in the futures market is this one right here. Let's pay attention to the 300-minute chart here for the S&P futures. Hopefully you're watching us on Tiger TV. This chart here is a thing of beauty in that it shows the descending price channel that the ES Mini has been traveling in ever since it made its highs out here. These highs coming back into the time frame of 4 a.m. back on September the 19th out there. So if we take a look at that high, you can see the blue diagonal lines going from upper left to lower right out here. We can see how price has been contained. You know, it's sure things got a little out of whack yesterday inside the ES Mini, but even on that 5-hour chart, we saw price pushing lower with less relative weakness out there, and then we saw the snap back out there. And, in fact, you got a nice little bullish candle out here, reversal signal that took place coming in the 5:15 close on the contract for the day out there, and some follow through. Now what we are seeing here is really the fight between the bulls and the bears. Let me just expand this out, and we'll expand it up. You can see the market profile. That's a resistance level, 1948.55. You can see that price is traveling above that area as we speak right now. Of course, what price is running into is the top of that descending price channel. If, in fact, what we see here, and you're only in the second wave on the way up, and remember that's not till 2 p.m. that the current candle session that we're in on my 5-hour chart, when that actually expires out here, when that completes that candle session. But you get above this descending price channel, and it's a really good indication that you're seeing a change in trend. Not just a snapback rally, not just a counter trend rally out here, but you will have broken the back. You'll have broken the price channel, the descending price channel out there. Now, we did see price sneak its head above this level. This was back here at about 9 o'clock in the morning. This was on September 30th. And then right out of the chute is when we saw selling come into the ES out here. So my opinion, this is, you can create this descending price channel on your 120-minute chart, whatever time frame you use. It should look pretty much like this out here, and that, in my opinion, is what we want to be watching. So price may have just simply hit. So from those who are short, here's the good news. You don't want to see, price has just bumped itself into a resistance area. For those that are long, if you're long from the bottom, make sure that you've got stops in place. If you're not either at this stage, wait to see what happens inside this resistance area out there. That may not help those folks who are in a trade or not in a trade when it comes to the Nadex platform out there. But, you guys have done really well without my assistance, that's for sure. So that's what's going on inside of the 5-hour chart. Let's go take a look at Goldilocks and silver. You got gold getting whacked here this morning, down $17 out here. So let's go check in on the gold contract. It is now at this stage of the game broken through a support level. It's TAS market profile down to that 1210 level. What does that say for Goldilocks? It says gold could make its way down to the 1140 range. You're well away from that. You're 1198, but it's a possibility. We'll see what happens when and if gold first tackles the 1181 area, and that is the December 31st swing point low, 1181.40. You're trading into that swing point as we speak right now. You've never really broken above that swing point, so that's going to be the level that gets tested, 1181.40. Any close below that, then you can start taking a look at that 1140 area, and that's what's going on inside of gold. If we go take a look at what's going on inside of silver, silver off 17 pennies, trading out at 1687 as we speak right now. If we take a look at that, you're down below the 1 to 1.272. A to B equals CD to the downside. That says your next level, your next stop on this boat would be at 1586 if this area here doesn't hold. If we take a look at expansions, our expansion of our B to C swing point out here, the 1.272. Oops, come on. There you go. Solid. Oh, I didn't mean to do that. Let me do this here. Let me try to expand it up. Let me move this up. You're trading right now down to that 1.618 expansion. So it's important for silver to hold 1675. Right now, we got Dow futures up 111, S&P up 13, NASDAQ up 22. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 99 points, trading out at 16,900. S&P up 11 at 1957. NASDAQ Composite up 25 at 44.55. Russell 2000 up 9.5 points, trading at 11.05 out there. Leading the charge, the upside. Salix Pharmaceuticals up 6%, up $8.80. Covidien up 7%, up $6. Shire PLC up a couple percent, up $5. Palo Alto Networks, PANW up 4% and $4. Netflix up 4, Amazon up 3, Medtronic up $3. You've got Mylan Inc. up about 4%, up $1.78. To the downside, lead the charge. You got Rand Gold Resources. Not surprising with the Goldilocks being down this morning. She's down $2, down 3% this morning. Agnico Eagle Mines down to $1.95, trading out at $28.34. BHP Billiton off $1.56. Rio Tinto down to $1.35 out here. So mostly gold and gold miners at the moment that are getting hit to the downside out there. Let's go check in on the currency pairs. Let's take a look at the euro, U.S. dollar, totally getting crushed here this morning. Down below this little support that it created, this little three candle morning star pattern out here that said support was down at the low of this session, which was 1.2571. So it's well below that as we speak right now, trading out of 1.2526. Of course, there's a little bit of delay on this chart here. Where's the euro headed to? Well, let's go take a look at the weekly time frame. I believe the 0.786 retracement of the larger pattern is down just below out here. So let's go take a look at that. We're coming off of the swing point from July 23rd, 2012, all the way up, and it's a weekly chart that I'm looking at on my screen, all the way to the high on May the 5th. And the 0.786 level looks like that's what's going to get hit, 1.2460, and you're trading at 1.252 as we speak right now. Let's go take a look at the Japanese yen out here. Japanese yen off to the moon. Again, here's a weekly chart. Let's go take a look at the let's go take a look at the daily time frame out here. I believe that's got the 1 to 2 A to B equals CD to the upside. Do I still have that painted in here? Yeah, I do. So actually, the Japanese yen still hasn't taken that out. So the Japanese yen, as we know right now, it's got some pretty stiff resistance out here. That's this key reversal session that had formed on October the 1st, bearish engulfing candle. If it can take out that high, which, by the way, is at 110.08, then it will be off to the races on its next move to the upside. But that is resistance as we speak right now. That's what's going on inside the Japanese yen. If we take a look at the Great British Pound here, back below its swing point yesterday, got down to the 0.786 level. Now it's simply continuing its move down out here. This, in fact, could be set up an even larger A to B equals CD to the downside as it takes out its swing point from September the 9th with a wide-ranging bar. Doing it with less relative weakness out there, that always makes things suspect, but not until you see reversal signals at anything to really be worried about. Let's go take a look at, so Dow's giving back some of its gains right now. The market is. We'll see if this is going to be a pop and a drop out there. Remember, when we took a look at that 30-minute chart, it was signaling that we should see some type of retracement or pullback. It's really going to be the depth of that move that will give us any kind of indication. Of course, at the 5-hour chart on the ES Mini, we know that there's some significant resistance up there. Let's go take a look at some of these stocks here that are popping and dropping. Let's take a look at leading the charge to the downside. We got Rand Gold Resources off a couple of bucks right now, gapping down this morning. So where is this headed to? Let's take this back and take a look at retracement levels. Let me put this onto a weekly time frame at the moment. So if we take a look at Rand Gold, trading out right now at 65.43. Let's take a look at its retracement from its swing point low. So you can see this stock here is held up much better than gold and or silver. And right now trading right at the 0.786 retracement level, or very near to it. The actual 786 retracement is 65.76. You're trading at 65.44. If it can hold this area, then great. Volume-wise so far for the week, 3.7 million shares. The swing point down here has got 4.3 million shares, and I imagine there's some pretty decent volume here this morning. If it does not hold the 65.76 level, price ought to head down to the January 6th swing point, somewhere between 63.54 and 59.19. Ticker symbol GOLD, Rand Gold Resources. Also to the downside out here, we've got Wayfair Inc. W is the ticker symbol out here, not like the hotel, the W out there. That looks like an IPO. So we won't spend any time on Wayfair Inc. Let's go take a look at BHP Billiton, BBL. I thought it was BHP. Yeah, so there's two ticker symbols out here for it. Let's go take a look at, let's look at BBL. Let's go see what kind of bubble we've got inside of BBL, what it's doing. So moving down this, so again, a weekly chart that we're taking a look at. So far for the week, 4.2 million shares moving down into its swing point from July of 2013. That's only got 2 million shares. So that's moving into that swing point with too much volume. Suggests that the low ought to be tested, 49.56 on that equity. Let's take a look at AEM, Agnico Eagle Mines out here, down 5% off $1.53. Still have the weekly charts up on our screen here. That is coming into the swing point from April the 21st out here. 16 million shares on that swing point, and it's hitting it with light volume, only 9 million shares. If it rejects the top of that swing point, which is 29.06, that would be potentially bullish out here. You're 28.75. You close inside 29.06. It says, hey, I probably want to go test the 26.58 level. So we'll see how these equities here pan out during the day. Let's take a look at some things to the upside. Let's go take a look at Salix Pharmaceuticals, up $7 this morning. Again, let's keep it on the weekly chart so we can get a feel for what's going on here. We see that Salix Pharmaceuticals had completed a 1 to 1.272 A to B equals CD to the upside. Really hasn't backed off much, just a slight retracement. It's a high volume high on the weekly from last week. That says that 172.98 is going to get tested again, whether that's next week or when that's going to be. It says it's going to be tested again. Nothing really bearish as we take a look at this equity on its weekly time frame. Let's take a look at Shire PLC. SHPG is the ticker symbol. That on a weekly basis above its market profile. This thing looks bullish, had a nice wide price spread week, I should say, on June the 16th, 8 million shares, but you had really accelerated volume, but not so much wide price spread up at the highs out here on July 14th. 20 million shares the upside. Nonetheless, this still looks very bullish out here. Shire PLC. Covidien, COV is a ticker symbol, up 6.5%, up $5 and change, taking out a swing point. That swing point out here was wide price spread, accelerated volume. That was on June the 16th. 130 million shares out there. This week so far, you've done only about, 30 million shares out here. Nonetheless, it's in a bullish mode so long as it closes above 92.68 out here. That is COV is the ticker symbol. I don't see anything stopping this equity. It's at all-time highs out here. Let's take a look at Palo Alto Networks. PANW is the ticker symbol. This, too, taking out a swing point on a weekly basis. The swing point that it had wide price spread, accelerated volume. From September the 8th, 21 million shares. You're up and above that level. Much lighter volume, only 9 million shares out here. Let's see. This had a B point that was formed back on March the 17th. 7 million shares. As price got above that level, it did it with 7 million shares. It did it with 7.6 million shares. So this has got a confirmed A to B equals CD to the upside. Let's go see at what stage of the game it's in here. That confirmed A to B equals CD. It's beyond the 1-to-1. Now it's on its way to the 1 to 1.272 level. 108.96 is the number written in its future out here, and that is Palo Alto Networks out there. Let's go take a look. So we've got things that are moving to the upside, moving to the downside. We took a look at currencies. We took a look at commodities. Well, we took a look at gold and silver. We didn't take a look at light sweet crude. Let's go take a look at light sweet crude out here. Let's go take a look at the current contract trading out at $90.90 out here. You've had, this is quite a weekly, this is a weekly chart out here, quite a weekly swing. What we've done on a weekly basis has come back. What it's done, it's come back and it's tested its swing point out here. It's 100% move from January the 13th as it got down to a low of 87.85 back then. Your low so far this week has been 88.18, close enough for 100% move. Let's put this on a daily chart out here. Let's go see what it's doing on the daily time frame. Daily time frame here. No, looked like it was going to form a hammer candle yesterday. It did not form a hammer candle out there. So other than its market profile, you don't have much in the way of support out here. No reversal signal, so to speak. Well, I take that back. Here's what the light sweet crude has done. Your bullish signal came right here. Was your key reversal session, this 89.56, this trading session from September the 11th out there. That is your level of support. It has still been acting as a level of support. Since then, all we have really seen is a sideways consolidation move out here. Really important if light sweet crude is going to take off, that it gets above the price point of $94 even Steven out here. I'd actually have to say get it above the swing point from September 30th, which is at $94.90, would even be a more bullish thing for Texas T out there. Let's go check in on the Qs. Let's go check in on the ETF structures. Then we'll go back into the futures marketplace out there. So let's go take a look at the, well, I know what we're going to do. We're going to take a look at the summation index. What did we see take place yesterday? As you know, one of the things that I was calling for out here, the reason why I believe we have just made a significant bottom, the Santa Claus rally bottom. We'll look back and we'll say, wow. Because, things got fairly bearish out here. And, what we're seeing take place is going to be one heck of a bottom. One heck of a bottom. It's going to be choppy. I promise you this. It will be choppy out here. So get ready to get your Florida State chop out there. Yes, I'm an FSU fan and a UF. I'm a fan of every college in the state of Florida, and Michigan too, and maybe your home state as well. I love college football. I love college football Saturdays out there. Nothing like game day as well. In any event, when we take a look at the New York Stock Exchange, what I was suggesting here was that the pattern that was forming back here that formed a really nice low back in June of 2013 down to June 24th of 2013. It was like June, 13th or something like June 5th, June 6th, June 4th, somewhere right there to the June 24, 2013. We saw price move lower, and what we also saw was we saw the price oscillator, the McClellan price oscillator, making higher lows out here. And in essence, that's what we really saw take place yesterday, that exact same pattern. We got down to this very oversold bottom-ish area inside that price oscillator on September the 25th, and then yesterday what we saw was a higher low out here. Now, what really needs to happen in order for Santa's elves to get real happy is price needs to get back inside this shorter-term rising price channel. It's the price channel coming off of the June lows out here. So price is going to go back and it's going to hit that. The question is going to be, does it have the right momentum to get back inside there? You get back inside there, and then what we had was a false break to the downside. Now, right now, the price oscillator, it's at a minus 78. You need something like, well, I'll give you the exact number, because I know you don't want something like, you want to know what the number is. If you were to see today 2,813 or more net advancing issues, you'll see this price oscillator get above the zero line. Then what I can do is I can guarantee you that Santa Claus has arrived out here. I don't know if we'll see that today. Do we need to see that today in order for this thing to get bullish? The answer is no. All you really need to see today is this. All you really need to see is the ES Mini on the 5-hour chart or any time frame chart. Go ahead and clearly break above the descending price channel out there. If it does that, then we will have seen the change in trend that took place as price moved lower, as it so often does with less relative weakness, and then you get the reversal signal out here. And that is what marks those bottoms at an early stage of the game. And that's what we're taking a look at. That's what the Rhodes momentum trading signals and indicators will do for you. They will get you those early stage reversals out here. We'll see. The market's got to prove itself to us. I know what I've been looking for and have been committed to that, and I have seen nothing that has changed my opinion on that. The VIX index, just as an example, as I showed inside my newsletter service here. If you take a look at this, and I don't use it too often, but I always have it on as part of my arsenal out here. You'll see the upper portion of the screen. You'll see the Bollinger Bands out here. That's just simply a one standard deviation out here with a 50-day moving average. And you can see those arrows that I have pointed across my screen. You put those arrows up there when the price gets outside and gets stretched. This is the VIX index that we're looking at. When it gets so stretched and gets such above that Bollinger Band, utilizing those parameters out here, what typically happens is you see a large snapback. It's got to get back inside that trend or inside that band. I can't tell you why. I just know that it does out there. Some of these technical tools and patterns that I use, it's not so much, you might like to know how to put the car together, if you've taken it apart. But, that doesn't mean that you need to know how to do that in order to drive the car. Well, right here, all I'm doing is just driving the car and taking a look at the markets out here and taking a look at patterns. And when we saw that stretch inside this rubber band inside the VIX, it's got to get back inside it. And now what it's likely to do is get down to the bottom of that Bollinger Band, now right around that 1194 area out here. So it was also another signal of something more than really just a counter-trend rally. Can I rule that out? No, I can't rule out anything out here. But as I say, I have been calling for a significant bottom here. You've been listening to the show for a long time. I haven't let off of the gas out there. The question was just a matter of when. And yesterday may have been that when. 877-927-6648. This is Steve Rhodes, TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
And again, congratulations to all those participants in our virtual trading competition. Just some wonderful winners out there, folks that had a great time. So make sure you get your trades in today. We got 5 lucky winners, a grand prize winner, $3,000 out to that individual. Right now, we got a tight race between D. Coombs and C. Norwood out there. And, there's somebody who could come up from the rear. That's for sure. P. Willard's at $29,000. He's got to make up a bit of ground out here today as D. Coombs has got the $48,000 figure out there. A question in the Tiger Den about the ITB, whether today is a key reversal or not. Let's go find out here. Let's put in the ITB. The ITB is the ETF for the U.S. home construction business out here. No key reversal, if that was the question, no key reversal on a daily chart, that is. Yesterday would have been the day that could have happened out here. But what we didn't see was price exceed the prior day's candle intra-session. The October 1st high was at 22.59. Yesterday's high was at 22.56. You did have a bullish engulfing candle, though. You had the ITB testing a swing point from August 1st that had 4 million shares. That was tested with 4.3 million shares, so approximately similar type of volume out there, gapping up this morning, 295,000 shares out there. If you are long the ITB, your target's going to be the swing point. Pretty simple, the September 17th swing point area. 2365 is going to be a level of resistance once you clear 2294, and then 2381 ought to be a settling point for the ITB as we speak right now. If we go take a look at the let's go take a look at the Russell 2000 out here. If we take a look at that, what we know about the Russell 2000, Russell 2000 yesterday gave us a nice little, it's a second test that we've seen of that hammer candle. That hammer candle is muy importante. That is the hammer candle that was formed out here on May the 15th. That low was tested. That has been tested twice, both days with too much volume, but just shows you just how strong that hammer candle is out there. That low of 1082.53, little piercing candle yesterday, gapping up today. That's a sign of a reversal. We could actually see the Russell 2000 get all the way back up to the 12-12 area. It's been in a long-term consolidation, 10 to 11-month consolidation pattern out here. Where are the resistance levels inside of the Russell 2000? 1108, you're trading at 1105. You get above 1108, 1117. Once you clear 1117, you're up above the clouds out there. And then that says, hey, you look at just normal retracements, or you can go back and let's take a look at normal retracements out here just of this last leg down. Oh, I was going to try to do that. What did I grab out there? Something that was the wrong thing. Let me try to do that one more time. But I may have, so there we go. Okay, so grab the right tool. That would say, hey, you're looking at least 1143 then. So you clear 1117, then 1143 would be in the cards. Russell 2000 gave the largest reversal signals yesterday. We take a look at the, just as an example, here's the daily chart on the futures contract out here. You can see the 1-to-1 A to B equals CD, the downside. It was perfecto as it hit that 1080 level out there, piercing candle. Some additional bullish moves here today, so that looks pretty good inside of the Russell on the daily chart out here. If you take a look at the 5-hour energy drink chart out here, it had one of Stevie's favorite patterns, and that was at price relative strength divergent pattern, firmed up with a bullish engulfing bull sash candle right now, just dealing with the resistance level of its market profile. You get above that, it hasn't gotten above a resistance level on a 5-hour time frame of its resistance level for quite some time. Folks, it is Fantastic Friday. Have a fantastic weekend. Stay tuned for our man Tom O'Brien and Darryl Martin. Good luck to all of you in the TFNN virtual trading competition. Have a great weekend. Look forward to seeing you Monday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.